right, value stocks. Value is all about private discount. Value assumes that there's short-term inefficiencies in the market, and some stocks are going to be undervalued, so they're huge bargain hunters. The king of value, the founder of value, Benjamin Graham, along with Mr. Dodd, they wrote this book, The Intelligent Investor. This is the first ever value kind of approach, and they've had a long line of following. Warren Buffett started value, Charles Brandis over at Brandis Investment Partners. This also will be very contrarian. Typically, value managers, from my experience, fall into two categories. The ones that are really focused on intrinsic valuation and margin of safety. That's like Brandis Investments. And then another kind called contrarians, more like a Dodd and Cox type thing, where you're taking on risks, such as maybe there's litigation, maybe there's some sort of external risk, and you're betting that the company, through good management, can overcome that risk, and that's why it's undervalued. I want to give you a demonstration of why value investing has done so well in this situation. So the tech bubble, value investors, they cleaned up during the tech bubble. 2001, tech prices, technology prices were hugely overvalued. How many of you are familiar with a PE ratio? So basically, it's the price of a share divided by earnings per share. So how many dollars are you paying per dollar of earning in a company? As you can see by the light blue line, around this area, the PE shot up to 60. That's basically saying you're paying $60 for $1 of earnings. I mean, that's kind of outlandish, outrageous. And as you can see, the market crashed when that happened. The reason that this light blue graph is kind of to the right is because PE is a lagging indicator, because price changes every single day. You go on Nordstrom's price and you see it change every day, but when you buy something at Nordstrom's, they don't put the earnings up right away. It takes a quarter for them to put earnings. That's why you kind of see a little shift in the graph. And most good value investors, the market went down like 20%, like everyone, they made money because they thought, hey, this is really overvalued. Let's get away from this. Let's go to consumer staples.